Hi everyone, today let's talk about Jerome Powell's comments once again, then we'll take a quick look at the data and the charts. Then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jerome Powell spoke again, and it feels like he says the same thing over and over again, but markets continue to react pretty strongly to this. He said the Fed is not confident that they have done enough to beat down inflation, and they are still looking for that 2% goal. And we did talk about this a little bit in yesterday's video, and he talked about the same thing during the FOMC. There is still potential for another hike based on current conditions and current data, and he reiterated that one more time. We could see another hike this year or early next year. Just because we've paused 2 meetings in a row does not mean that we are done. And he said his colleagues and him are both gratified by this process, saying that they are moving in the right direction, but it still has a long way to go. They mention here markets were largely convinced that the Fed is through with rate hikes, and the comments today kind of told the markets that we might see one more hike, a little bit higher in terms of probabilities, and markets didn't like that. And looking at the charts, we're also in an area of resistance, so it could be just a little bit of a catalyst there, and we'll take a look at that on the charts. Looking at the economic calendar, basically nothing. Initial jobless claims in line, slight tick up on the revision, Fed balance sheet basically flat. Looking at tomorrow, we do have Michigan numbers. Those are fairly interesting, but that is it for the economic data. Looking at earnings, there's a lot of green across the board here. AstraZeneca did miss on revenue. Trade Desk beat on both. That's good for them. Might take a look at that chart in this one. Wynn Resorts beating on both. Again, Monday, you got Tyson Foods. Tuesday, Home Depot. That's going to be interesting. And Cisco on Wednesday. Moving over to Max Payne. Currently sitting at 433. Stock price basically flat from yesterday, 434. Down a little bit, few cents. Total options, 1.3 million. Definitely matters now. Top of the puts, 441. Really did not move, but we're kind of dipping back into this mid-range. 435, interesting. Don't expect to get below 430. Makes sense to kind of land in this 432.50 area at this point, and it looks a little bit weaker than it did yesterday. Moving through these charts fairly quickly, starting off with the S&Ps, you can see we sold off throughout the day. Kind of expected that. I talked about it yesterday. We were waiting for a little bit of a pullback. Yesterday was a doji, but still positive in this zone of resistance, and we are now breaking down a little bit on catalyst momentum on the daily chart, stepping down. Everything you would expect to see in a little bit of a pullback. Again, looking for support around that 4270 or even in this 4280 area, right in this zone where you have a consolidation of the longer term EMAs. On the hourly chart, you got the 200s sitting down at 425. That could be an interesting area as well. We haven't quite taken out this previous low, but once that happens, then we're looking at 431.71 and then below that 428.59. I would expect this to continue to roll over. We now have a low, slightly lower than this previous low, but not below this consolidation. If we get a little bit of a pullback, rally, touch this level and reject, that will be a confirmation that we should expect some shorter term moves lower. Again, in the medium term, I'm expecting these levels down here to hold. Similarly on the NASDAQ, we got that big breakdown, touch that level right at 370. Makes sense. We touch that highly traded zone. On the daily chart, you can see it right here. And then once we get below this trend line down around that 369 area, that's going to be another indicator. Momentum stepping down just like we've been waiting for. You can see that consolidation down around 358 to 361. Could be the zone where we start to find a little bit of support. It would also look like an inverse head and shoulders there with the shoulder, head, right shoulder. Establish that higher low, look for the move higher, take out that neckline. Then we could be off to the races. I do think we're going to see more bullishness later in the year, but we're just extended here and we need to see some pullback. Moving over to the Russell and the Dow. No change to the thesis. Russell's been breaking down for a while. Didn't really consolidate, just broke straight down. Now we're at that 55 EMA on the 4-hour chart. Watching that at 167.34. Need that area to hold. Would like to see it get above that level and rally. Momentum says we're going to go a little bit lower. If this area breaks, then this previous consolidation low is what we're looking at, down around 164. Dow, similar thesis to the SPY in the NASDAQ. Broke below this consolidation. We're at the level 339.11. You want to see that break and push to 335.91 if you're a bear. Momentum says it's going to happen. RSI says it's going to happen. And like I said before, we're extended consolidation breakdown. Seems pretty straightforward. Moving over to Apple and Tesla. Apple got a small step into bearish momentum, but not really much of a pullback. We made a new high up to that 184 area, pulled back right back to my level, 182.36. Next level, 178.58. Got the 21 EMA sitting at 179.68. That could be interesting as well. Still a bullish trend. Looks like a slight pullback. Still seems extended. We're now below the SMA on the RSI. And to me, again, this seems like a bit of a pullback is set to come. Tesla got a downgrade. It broke down dramatically, took out all these levels. Next level for me, 197.75. I think the downgrade was all the way down into the 150s or so. I don't necessarily think we're going to see that, but this does not look like a great chart, and I would be patient here if you're a bull on Tesla. Moving over to staples and discretionary, we did not talk about this one yesterday because it really didn't do anything. You can see we just went straight sideways here on both charts. But now we got some more movement, bigger breakdown. We're at that 144 EMA on the 4-hour chart. Does not look great. Could pull back to the 55, down at 68.03, certainly possible. Momentum bearish. Still holding up better than everything else. Kind of looks more like a flag than a waterfall sell-off, which is what we're seeing here on discretionaries, more similar to Tesla. We're still above 158.03. We tested this level. Like I said before, first test of these usually holds. We're now pulling back. 55 EMA down at 154.94. Certainly possible we hold that level. You have one just behind it at 153.90. Could overthrow it to that level. And then the highly traded zone sitting around 152.30. So a couple of levels to watch to the downside, but plenty of room to fall before we get into those areas. Moving over to transports and oil and gas, following up on yesterday's video, we saw this pin bar on transports, and then we got the bigger breakdown. Momentum rolling over does not look great. Next level, 221.84. Looking at oil and gas, we continue this waterfall sell-off. We were watching 135.07 and the 200 SMA there. If it breaks through, that could be a big leg down to that 128 area. And that would also be another change of structure with this low here, and then take out that low to the downside could be very weak on oil and gas. And you can see that 128 level right at this previous consolidation high. Should be a pretty respected level, at least for a small bounce. Moving over to yields, seems like Jay Powell was sitting in his house and he's like, look at these yields selling off. Can't have it, need to go out and say some hawkish things. Sure enough, we got that rally on yields after the hawkish comments. Momentum stepping back towards bullish now on both of these. Not a great indicator for equities. Jumping back above that 4.55 area, above the 55 EMA. Still got the 9 sitting at 4.68. That could be interesting. And the 21 at 4.76. But this looks bullish once again, similar to this move. Came into the zone, big bullish candle, got the continuation all the way up to that 5 area. And that could absolutely happen again here. And if that does happen, we should expect more bearishness in the equities. Moving over to the dollar, big move higher on the hourly chart, got above the 200 SMA. You can see we dipped below that support level, 105.50, got back above it, rallied through. Daily chart, you can see we held it throughout, rallied up to the 9 EMA. Doesn't mean much here. We did get a dip low. We expected a little bit of a rally. If this establishes a lower high at the 21, then we get a continuation sell-off. That could be very bearish for the dollar and bullish for equities. But now with the hawkish comments here today and yields going higher, that might spur the dollar to break out. And we do have to pay attention. Next level to the upside would be 108. Moving over to volatility, move index continued to sell off. Interesting. But the VIX, big bullish day on the spike. You can see we tested that downtrend line. That trend line continues to be respected. Hit it a few times. Got the candle break right here on the move down. Tested it again. Tested it one more time here today. If it gets above it, holds. Could look for a rally back into this 1850 to 20 area. That would be very bearish for equities, certainly possible here on the VIX. If it establishes a lower high, that could give us an indicator for more bullishness to come, but you do have to wait for that to materialize. Right now, looking at a rally into the zone, then we could look for that breakdown. But this momentum turning towards bullish is not a great indicator for equities. Moving over to my accounts, you can see I rolled out and down on the IWM. I really thought that I took this position off, but I guess I rolled out and down. Took a little bit more of a hit there than I wanted to. Still only $100 on a potential $2.50 down move. But the way that I trade means that I don't really get all of the upside and I need to avoid as much of the downside as possible. Either way here, I sold a 167. I have 95 cents credit, so that would mean I would have a purchase price down around 166 on the IWM. That is 6 days from now, so I would have to be patient on that trade. Again, if that 55 EMA breaks, then I'm going to be looking to get out of that position. We'll see how it plays out tomorrow. Qs. I added some calls here at 372 for tomorrow at 86 cents. I saw the breakdown starting to materialize. I sold some calls to protect that position. Probably should have done the same thing here on the IWM as it continued to sell off. Just didn't do it that way. Overall, I am expecting more pullbacks to come. I also rolled down and in my calls. I had some 367s. I rolled that down and into 366 for only 6 days out now. Now I have $6.78 credit, and I already got some profit on that. So protecting myself even further. Break even sitting just below that 360 level. Again, only going 6 days out now. Overall, expecting more bearishness, at least in the short term, but medium term, more bullishness. Let me know down in the comments section what you thought of Jerome Powell's comments. Is this actually new information, or is this just a market reaction because we're more extended to the upside and this is bringing us back down to earth? Let me know what you think. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.